Welcome everyone. This is Diego from the clinic. First video of 2026. So I hope you guys enjoy. Subscribe to the channel. We'll be talking everything ESG nowadays. Preparing a list of videos on the topic, and I hope you guys enjoy it. Without further ado, let's dive into the topic. So basically, the thing here is ESG is no longer just a sustainability topic. It is no longer something handled by corporate sustainability team somewhere in a corner in the office, right? This is different nowadays. So ESG has officially entered the world of corporate finance. And if finance professionals ignore it, we risk making incomplete and potentially wrong decisions. So, in this video, I want to explain why ESG matters for finance teams right now and where it directly impacts corporate decision making. I hope you guys take something out of this, okay? It's not from a political perspective because they're really, I don't like this. It's not from a marketing angle. I won't say anything about this, okay? But it's from a pure finance lens. That's what matters for us here, right? So financial professionals are looking via this perspective. So the first thing to unpack here, why ESG really means for finance, okay? When people hear ESG, environmental, social, governance, they often think about climate change. Climate change reports or sustainability branding, all of those things. But for finance, ESG is really about only three things, okay? Those things are risk, capital allocation, and long-term value creation. That's it. It summarizes it all, okay? Then you may, there's a few other things to highlight on this. So environmental factors, let's go through them, right? Environmental factors affect operational risk and regulatory exposure. That's one. The social factors, they affect reputation, workforce stability, and customer behavior, okay? This is the second one. The third one, governance, it affects trust, control, and ultimately the cost of capital. At its core, ESG is about understanding risks and opportunities that, traditional financial statements don't fully capture. That's why we have this. So, and that's exactly where finance should step in, okay? So, it's to look somewhere else other than our traditional financial statements. Where ESG hits corporate finance, that's something that we're going to unpack now. Let's make it practical, at least try. There are three main areas where ESG directly impacts finance teams nowadays. First, cost of capital and valuation. That's the first. Investors are pricing ESG risk. Companies with high environmental exposure, weak governance, or reputational risk may face higher cost of debt, lower investor appetite, and lower valuation multiples. These things are real and they affect the companies a lot. If you're in corporate finance, treasury, or FP&A, this matters. I can tell you this, or at least it should matter to you. Because cost of capital affects everything, from project approval to long-term valuation. Okay? So this is very broad. And the second thing, the capital allocation decisions. Okay? Capital allocation decisions. Imagine you're deciding between two investments here. The project A delivers a strong short-term return but increasing carbon exposure. That's the first one. The project B, it delivers slightly lower returns but aligns with long-term regulatory trends. If you ignore ESG, you might pick the wrong one here. Okay? And finance teams now need to evaluate investments not only from a net present value or IIR, but also on sustainability risk and long-term resilience. We have to approach this that way, okay? No NPV or IRR only. So risk management and forecasting, that's the third topic that I would like to unpack here on those, right? Those risks. Regulatory changes, carbon pricing, supply chain disruption, climate-related events. These are not theoretical anymore. They are happening. They impact insurance pricing. They impact asset values. They impact operating costs. It's just to say a few things. And increasingly, finance teams are being asked, what does this mean financially? Like, there's a lot of words, but how to translate it into finance? How this links into finance? And the question belongs to us, professionals, finance professionals, right? So this is valid. And here I would like to bring a real world example, just to try to make more sense of all of these talks. Let's take a simple example. I'll try to make it simple, okay? Imagine an insurance or reinsurance company underwriting heavy carbon industries, such as mining, all of those things that we have there. If regulation tightens, if carbon takes increase, if public pressure shifts, loss ratios could change. Investment portfolios could lose value. Client demand could shift. So if finance ignores ESG signals, forecasts become inaccurate. But if ESG integrated into planning models, capital models, and risk scenarios, suddenly forecasting becomes more realistic, okay? If it's integrated. And this is where ESG stops being a reporting exercise as it is for a lot of companies nowadays. And it becomes a strategic finance tool. You can really use that to your advantage. Then why finance must own part of ESG? Here is the key point, at least for me, right? Up to this point. ESG metrics are slowly moving next to KPIs. We're getting to a point in which it's becoming part of the KPIs. Emissions intensity, board structure, supply chain exposure, climate stress scenarios. Soon, and in many companies already, finance teams will need to forecast them, to analyze them and explain them to the leadership. So, if you think of it, leadership will ask, what does this mean for profitability? How this impacts our profitability? And that answer doesn't come from sustainability alone, okay? That's where we bring value to the conversation here. It comes from finance. We have to analyze this from a financial perspective, through the financial lens. So just to put a close here, okay? ESG is not about trends. Forget about trends and the noise. It's not about optics. It's about integrating a broader risk and long-term thinking into financial decisions. That's something else you put on top of your analysis and all the numbers that you produce. And in finance, professionals who understand this early will be ahead of the curve for sure, no doubt. This is the first video in what could become a deeper explanation of sustainable finance. Okay, so I don't know, let's see how it goes. So if you'd like me to cover carbon markets, ESG reporting frameworks, or how to integrate ESG into FP&A models, let me know down in the comment section below, and I can create something for you guys. So thank you for watching me and being here with me, and I'll see you in the next one. Bye.